Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and today we're getting an update on Elemental Altus royalties. Elemental Altus is traded on the TSXV under the ticker ELE and on the OTCQX under the ticker ELEMF. And I'm joined today with the Chief Financial Officer of Elemental Altus, David Baker. And Dave, it's great to get you on the show as always to dive in under the hood on some of the financials for the company, but also we'll get some partner royalty updates, and we'll also talk about a new team member that you've added to the board. So a lot to get into in this call, but let's start off with the financials. You announced on March the 3rd that you have had a 50% adjusted revenue growth for 2025, but you also recapped some of the numbers from 2024. I want to dive into 2024 because it was a record year again. It seems like every call we've had with you guys has been record revenues, record quarters, but let's get into this. This is in US dollars, 21.6 million in preliminary adjusted revenue. It was a record year for the company. It was a record quarter in Q4. So just give us an update on how things are going as far as revenue generation and gold equivalent ounces.
Hey, Shad, always a pleasure. Thanks for having us on. Yeah, again, 7 consecutive years of record revenue. Every year since inception of the company has been a better year. This year, no exception. Next year will be no exception as well. Really excited that, adjusted revenue came in a guidance of 21.6. We say adjusted revenue because that includes all the revenue you get from our favorite copper royalty down at Caserones. But we do equity accounting for that. So we pick up that $5.3 million that we got from Caserones to get into that adjusted revenue of 21.6. So again, that's 21% up from last year. And expecting significant improvements year on year.
Well, when you look at it, Dave, there's a lot of revenues coming in from the company from the different partner updates. You have gold and, like as you mentioned with Caserones, the copper. But you also have a number of milestone payments that come in each year, and it's a little different than maybe what some people follow because they're just looking at the production, but they forget you have all these different agreements on different properties. Maybe give us a snapshot of how much of that is from the production, how much of that is the one-off payments.
Yeah, absolutely. So again, we announced record guidance for this year, so 2025. That's a 50% increase, 50% increase year on year, and it's 30.1 to 34.3 million US dollars, and that's using a $2,600 gold price. So clearly, we've got some room to grow that as well. So really excited about 50% year on year increase to another record year that we're expecting. We have these milestone payments, as you say. We don't include those in the guidance. This is all in addition to that. So we're expecting up to $15 million additionally in one-off payments, most of that weighted to the first half of the year. Where are these coming from? Our settlement with Ming. So we got expected $13 million in Ming. We've got 3 of that already. So in April, we're going to get $10 million from Firefly Metals, who are doing good things, doing very good things, just listed on the TSX. So that's coming in April. That's not conditional. That will just land in the bank account. We're also expected to get $1 million upon first commercial production at Korali-Sud. That's already happened. So we'll get that 90 days after commercial production. That'll land in Q2. That's $1 million US dollars. Arizona Sonoran, one of our favorite operators who operate our Cactus royalty. They have a right to buy down 0.14% of our royalty down there, leaving us with about 0.5%. They have the right to do that for $1.9 million, and they've got to do that before July. So $13 million, these one-off payments, locked in, guaranteed, will happen. The last $2 million is 100,000 ounces of production at Korali-Sud. I'd be TBC whether that falls into this year or next year. So we're saying up to 15, but 13 is locked in. That's all on top of that $30 to $34 million of revenue. So it's going to be quite the bumper year.
Well, and that's a great point to make, that's not even included in those numbers. So you have these one-off payments coming in, things like the Arizona Sonora and Cactus royalty if they pay it down, or like as you just mentioned, some of the stuff from Allied, or even some of these one-off payments that people make to you, like on Ming, where it's, you're getting the rest of the money that you haven't gotten last year yet. That's a big chunk coming in addition to all the gold equivalent ounce royalty revenues. And in addition to, you have a $50 million revolving credit facility. So walk us through the war chest here for 2025, Dave. I mean, it sounds like you got a lot of capital that you could deploy into new deals.
Yeah, no pressure. No, it's very good. So last year, the core focus of the company was really royalty acquisitions and paying down debt. So last year, we acquired the portfolio from AlphaStream, which doubled our royalties on Bonikro, Ballarat, SKO, and a bunch of exciting exploration assets in Australia. And then AlphaStream, rather than being a joint venture partner, came in as 14% shareholders on the register. They're very well backed, very supportive UAE fund. So that was really the focus last year. Now, paid off $30 million of debt last year. So we are now debt free. $50 million on the facility with National Bank, CIBC, and RBC, three bank syndicate. And they have indicated they would upsize that if needed for transactions. Obviously, a modest amount of debt is appropriate, speaking with my finance hat on. But if we're looking at as of today, we've had a bit of royalty revenue come in. So let's say we've got $6 million in the bank. More than $20 million of free cash flow this year, I would say to say is well above consensus is well above that. And then $50 million on our facility, we're looking at like 80 more million dollars to deploy into royalty acquisitions without having to issue a single share in the market. And I would say, Shad, as well, we haven't done a widely marketed fundraise since December 2022, so we're not in the business of diluting our shareholders.
Yeah, that's a uncommon theme in the mining business, but that's the beauty of the royalty business models, that you actually have revenues coming in and you don't have thousands of employees out there in the field doing the drilling, exploring, developing, and building of mines. So the great part of the royalty business is you're able to generate all this cash flow with a lean and mean team. I guess while we're talking about the lean and mean team, we should also bring up the fact that you've brought in Sandeep Singh as a director. Maybe talk about the new addition to the team.
I cannot be more excited to have Sandeep joining the team. As I'm sure most of your listeners will know, Sandeep, currently the CEO of Western Copper, doing really excellent things there. I guess most relevant to our space is a former president and CEO of Cisco Gold Royalties, one of our intermediate peers. And then he really led that strategic turnaround there, did a really good job of modernizing the team, had exceptional share price performance, and really, really quite well liked and respected by the analyst and investment community. I've been wandering around the streets of Toronto around PDAC and had nothing but universal acknowledgement. That's a really good pickup for us. Obviously, Sandeep's got a strong investment banking background, founded Maxit Capital, who are one of the stronger independent advisors here in Toronto. He's going to be invaluable for the team. They're really excited to have him on board.
Yeah, not just from the mining capacity, but also from the knowledge he had from a Cisco Gold royalty. So really understanding both sides of the equation here, from the mining side and the royalty side. So yeah, absolutely wanted to point that out, that you've grown the team. But as far as growing the resources and growing the portfolio of royalties, what kind of acquisitions do you think you'd like to do? Fred had mentioned to us that you guys were getting into some of the earlier stage or mid-stage development assets that had good optionality because you had a portfolio that you focused on for the first number of years that was all production assets. So are you still looking at acquiring some producing assets? Are you looking at more development assets? Talk to us about the kind of acquisitions you'd like to make.
Yeah, I mean, I guess probably not good for all our grey hair, but we did decide to do this the hard way. So I guess typically smaller royalty companies have a very concentrated portfolio of development assets, lots of optionality, and look to re-rate over time and have those come in and have the revenue growth. But we've been cash flow positive from the beginning. Fred acquired a small mineral sands royalty in 2017, so we kicked off with positive cash flow, and we've only grown that from there. In terms of next steps, look, we look at everything. We look at everything along the curve. We bought some producing royalties last year. We bought a little tungsten royalty last year that I'm convinced we paid 0.1 times NAV for. Likewise, the year before when we acquired our Cactus royalty from the RCF guys, we've just seen Royal Gold come in and buy the other half of that royalty at a 60% premium to what we paid. So 60% mark-to-market return in 14 months. We'll take that. We don't need to go out and chase revenue. I think that's really clear. Like I say, $30 to $34 million of revenue this year that's going to translate into earnings and material free cash flow. We don't need to go and pay for revenue. There's just absolutely no need for it. So what we can do is keep doing what we're good at. So existing third-party royalties on copper and gold operators in good countries that we know will have long life, lots of exploration potential. But yeah, to your point, Chad, we are looking at everything. So bilateral opportunities, we're looking at some portfolios as well. Always interested in M&A and consolidation. I think we've always been very clear on that. We always thought that Altus was always the first step in that process. So we're keeping the BD team extremely busy in terms of new opportunities, that's for sure.
Yeah, I'm glad you brought that up, Dave, just because I was going to ask you about considering portfolios of royalties instead of just one-off deals. So you're looking at all of it basically. You're looking at development, you're looking at production, but you don't have to go chase revenue, which some companies are now doing because you started off with revenue. So an interesting story. And the AlphaStream deal that you did last year was kind of a unique, but kind of a one-off thing where you were just basically getting the rest of the royalties you already had and bringing those into the fold. So we're going to be watching carefully to see what kind of deals that Elemental Altus structures. But yes, Altus and Elemental coming together was maybe just the very first part of a long narrative here where you could maybe bring more portfolios into the fold. Let's talk about the royalty partners you already have, though. We can do this in a number of different ways, but I guess let's start with copper because we already mentioned Caserones was your favorite copper royalty. It's handled a little different with accounting. I had you get into this last time, but just very briefly explain why the copper from Caserones is just handled a little differently on an accounting ledger.
Yeah, so us, EMX, and Franco-Nevada, the two other royalty companies, we all own a slice of the pie of that royalty, and that's through a Chilean company. And I'm not going to bore you or anyone with the accounting behind it, but because we have significant influence in that company, but we don't have control of that company, we have to do equity accounting. So effectively in the P&L, we report a share of profit of that company, and so that's revenue minus tax minus depletion. It's a non-cash number. So it's reported below the line. Then where you'll see that come in the cash flow statement is you'll see those post-tax dividends land in the cash flow from investments rather than cash flow from operations. It's not how we would do it. I'm working with the auditors to try and get comfortable with the accounting treatment there. But effectively what we have is a company in Chile that receives the royalty and pays us the royalty. That's all that company does, and it can't do anything else. So that's where we've landed there. What we do is we break it out in our MD&A and give everyone a full reconciliation of how you can get back to it. But it's material for us. I mean, $5.3 million this year of revenue from Caserones.
Well, have you heard anything from Lundin about how they are going to be growing it? Because I know that there had been no exploration for like a decade or two, and then Lundin Mining started doing a more substantial exploration program. What's the outlook on Caserones?
Yeah, it's a really good question, and we're excited ourselves. Obviously, the disclosure now is operated by a TSX issuer is incredibly more improved from where they were when it was held by effectively a private Japanese company. We actually caught up with some of the Lundin guys on the last Saturday before the conference here at PDAC, and they could not have been more positive on the exploration potential. Our understanding, and I think this is proved to be correct, is there wasn't real exploration done by the private Japanese owners. Look, they didn't have to. It's a 17-year mine life approximately down there. But the guys are extremely excited. They're generally doing like virgin exploration down there, untouched ground. Extremely excited. Again, it's already a long life asset, but I think this is just showing it's a generational asset producing sort of 130, 140,000 tons of copper equivalent a year.
All right, so that's a strong copper asset, and we'll definitely keep following along with all the growth at Caserones. Let's shift over to gold, though. You have another key cornerstone asset, and that is a gold royalty on the Karlawinda project operated by Capricorn. Now, this is a massive gold project. It's a big royalty for the company, and it's got a good growth profile for 2025. The beauty of these royalty projects is that a lot of times all of the upside exploration and development work is just gravy on top. You're not having to pay anything extra for it. Give us an idea of how Karlawinda is continuing to grow, Dave.
Yeah, so we acquired Karlawinda from South 32 at the start of 2021. They built that mine. I was in construction at the time. The Capricorn guys, ex-Regis team, did an incredible job, especially through COVID. They built that on time, under budget, producing about 120,000 ounces of gold a year for an initial sort of 10-year life. What they've done since, and we sort of had a bit of it was one of our upside cases. We were certainly aware that this team was pretty good at expansions. They'd done it before in past lives. They've announced a 50% increase in throughput. Now, it's not going to be 50% in terms of ounces. They're going to be processing lower grade material, but obviously reducing rehandling, material impact on costs. So we're seeing about a 30% increase in terms of ounces. So that pushes them from about 120,000 ounces of gold to 150,000 ounces a year. Last year, Karlawinda was approximately $6 million of revenue. So that means that we could be getting, let's say $8 million of revenue, maybe more at current gold prices without having to do anything. That's all baked in. I think importantly as well is they've kept the 10-year mine life. So even though they're producing 50% more rock, they've still pushed that mine life out to 10 years. And we think the scope to go well beyond that.
Yeah, again, the beauty of the royalty model, you got the optionality to the rising metals prices and optionality to increase throughput, but in their case, they found all this extra material, so their mine life has stayed the same, even though they're continuing to produce. It's just a nice combination of factors coming together, and it really highlights the strength of this business model. Let's talk about a gold royalty, though, that's becoming a very primary one for the company, another cornerstone asset, and that's at Korali-Sud. People remember this used to be called Diba, operated by Allied Gold. Give us an update on this royalty because I think when Fred was on the show last, Dave, he was mentioning that he was unsure if any of the gold was going to land in Q4 or if it was all going to land in Q1. I think the indication now is that that's all going to come in Q1.
Yeah, exactly, Shad. So we revised guidance at the back end of last year and quite prudently took Korali-Sud out. The Allied guys are doing great work with the Malian government. I think everyone agree it's been quite topical in the news. So they were working out that Korali-Sud is under the new mining code. So they've been really hammering it out with the government about how to process and ultimately how to produce and sell the gold. So in the end, they did produce 48,000 ounces of gold, but they weren't able to sell it before the end of the year. We're a royalty company. We don't get paid on production. We get paid on sales. So ultimately, all of that's going to land in Q1, which means that Q1's going to be a bit of a monster because we're going to get, I mean, obviously all of our gold and copper royalties are carrying on at higher gold prices. But then we're going to capture that 48,000 ounces that was produced in 2024, but ultimately is going to be sold in Q1 2025, plus the sort of mine production in Q1 as well. So we're going to get this real double bump from Korali-Sud in Q1 2025. So extremely excited to see that. I think what we're waiting for from the company is just a bit of a longer term outlook, what they see there. I think they're very short term focused at the moment, just trying to focus on their balance sheet. Which you've seen with the sale of half of that Sadiola mine to Ambrosia, a UAE group. So I think we're quite excited to see in some upside in what the future of those licenses hold for the Allied guys.
Well, I'm glad you brought that up, Dave, because there was some questions that were sent in to us, and there was some chatter, and I saw internet forums about what does that sale of half the project mean. Maybe just clarify, Allied is still going to be the operators here, and then essentially you're not expecting a major change on anything as far as operations.
No, caught up with the Allied guys a couple of times this week at the conference. No, nothing's changed. I think they probably felt like they weren't getting full value for Sadiola in the market. I mean, some of that's country discount, of course. So to have them coming in with, I think it was $145 million up front and then some contingent payments alongside, I think, all the infrastructure benefits that this group, that's my understanding, is that they're an infrastructure group. They saw that as a real windfall, and I couldn't agree. I couldn't agree more. Look, anything that shores up the balance sheet of our operators is a good thing for us. We just need them to be able to get on with it. And if they felt like they needed some cash or they felt like their asset wasn't being recognized in the market, that's no good for anybody. So we're extremely excited. We've had a chat with their team on the ground, pretty comfortable with what they're doing on our license. And we think that, those incremental ounces from Korali-Sud is still really the bridge for them through their sort of phase two, sulfide build there. And if they've got now the partner and the funding to do that, all the better. Super excited for them.
Yeah, you've got a good partner that now also has a good partner. So you've got
Yep.
a combination here. And yeah, you want to have healthy operators that have healthy balance sheets, and that way they can continue to plow a lot of a lot of those funds back into the project, and which grows the royalty for you over time. So let's just open it up as far as the rest of the portfolio. Do you want to mention anything about Bonacro or any other assets? Anything else you'd like people to know about as far as assets in the portfolio growing in 2025?
Yeah, we think a couple of really exciting things. I think we'll talk to Karlawinda expansion already, so we're expecting to see the study work on that this year. So we'll have a really good idea on timing and when we're expecting that to come in. Likewise, PFS at Arizona Sonoran's Cactus, we're expecting this year, and so that'll give us a bit more detail on when they really get into the high grade parts of our royalty, and give a bit more of an idea on timing. I mean, Bonacro's a monster. I mean, some months is $1 million of revenue, not every month. But I think that will be our best performer. It's quite a chunky royalty, 4.5% over, their guidance of, let's say, 100,000 ounces, of which 90% comes from the pit. So that's going to be a really big year for us. Look, Bonacro is capped, of course. Got about another 4 years to go, but they're going to be 4 incredible years at current gold prices. So really excited there. Bonacro's great operating environment in Cote d'Ivoire, doing really well. So I think, on all the key assets for the company, where we're really excited. And I think the challenge for us over the next year is adding a couple of really strong assets to the portfolio as well.
Yeah, I was going to save that for the end. We've already kind of teased that in the intro that like you have this big war chest built up from all the cash flow you'll be generating, the cash you already had on hand, obviously the revolving debt facility. You're going to be looking for accretive acquisitions, whether the development or production. Are there any other key news events or key things that you want to focus investors' minds on as far as what differentiates Elemental Altus versus some of your peers out in the industry?
Yeah, I mean, so the key one's going to be when the financials, and I mean, I don't think necessarily everyone's waiting on the edge of their seat for our financials, but we are, without exaggeration, the growth in free cash flow in the bank is going to exceed that growth in revenue. There's a real leverage to it. We're a fixed team. We've got 13 very high quality individuals and the company focused on getting this company to the next stage. And that real sort of fixed cost model, fixed overhead model really has these exploding margins when this revenue growth. So, hanging out for our full year financials and then our Q1s, I think it's going to be incredible. But then that puts the pressure on us. Like we're going to be judged on the deals we do. Really excited. The pipeline has never been more full. Our team are working diligently on some opportunities as we're talking right now. And so then, yeah, really, I could not be more excited that we have, the best part of 80, maybe even $100 million that we could deploy this year without without diluting our shareholders a single cent. And to have that as a $200 million company it's unbelievable, to be frank. I think we're in a unique position amongst all our peers.
Yeah, I think I noticed a lot bigger revenues, but then again, with all these other factors coming together, $80 million to deploy on a $200 million market cap is a very unique situation. That's a lot of fun. So yeah, you are going to be judged on the deals you do, but I think you should also be judged on the deals you've already done, and you've set up the company for financial strength. And so hats off to you. Let's get you back on when the Q1 numbers come out. I'm sure that's going to be a fun quarter to discuss. And then good luck on the deal making, Dave. And I know Fred has been tied up at the PDAC in another meeting, so we'll get you both back on next quarter and recap it. We'll be looking for the news flow from other acquisitions that you make. And for people listening in, if you want to follow along with all the news at Elemental Altus, definitely click on the link below this interview. It takes you right over the company website, straight to their news section, where you can sign up for updates or just follow along with the news as it hits the wires. Dave, always great talking with you. And as always, looking forward to our next conversation.
Can't wait. Thanks, Chad.